Hi everyone. So today's lesson is the trial balance. The trial balance is prepared after uh, balancing all the ledger accounts. In the accounting process, first we record all the transactions in the prime entry books. At first, we are recording all the transactions in the prime entry books by looking at the source document. So you have learned six prime entry books: cash book, bank account, petty cash book, sales journal, purchase journal, and general journal. Then you post those values or the summary of prime entry books to the ledger accounts according to the double entry principle. And at the end of the accounting period, you balance these ledger accounts. So those balances, debit balances and credit balances, are carried to the or extracted to the trial balance. We prepare this trial balance by taking all the balances of the ledger accounts. Uh, so this is a list which is prepared at the end of the period by including all the debit and credit balances of ledger accounts. We take all the debit balances and credit balances and we prepare a list. This list is known as the trial balance. And this is not an account. This is just a list or a summary of the ledger. Uh, if we have recorded all the transactions in ledger according to the double entry principle and balanced properly, the total of the debit column and the total of the credit column of the trial balance should be equal. This is the format of the trial balance. First you have to write the name of the business, then trial balance as at 31st December or the given date. You can put the given date. And here description. Under description you have to write the name of the ledger accounts. Ledger page, but most of the time ledger page number is not given, so you have to keep it blank. And debit column and the credit column. So after recording all the balances from ledger accounts, you have to get the total here, debit total and credit total. So if you have recorded all the transactions and all the balances properly and correctly, these two balances should be equal. So if the trial balance agrees or the totals are equal, the following two facts can be confirmed. First one is the values debited to the accounts are equal to the values credited to the accounts. If the two sides are equal, we can agree or we can confirm that all the values debited to the accounts and all the values credited to the accounts are equal. Then ledger accounts have been balanced correctly. If the ledger accounts are balanced properly, we take that balance. So mathematically, it may be accurate. But there are some situations where even though the trial balance agrees, there are some errors. So you will be learning that errors and you have to correct those errors in the last lesson, correction of accounting errors. Here an example is given. Following are the balances of accounts of Janakanta's business as at 30th of June, who commenced his business on 1st of January. So name of the accounts and the values or the balances are given. So when preparing trial balance, we have to identify what type of what kind of balance is there, whether it is a debit balance or a credit balance. So cash account always have a debit balance. Purchases, since it's an expense account, it should have a debit balance. Then sales. Sales is an income account. So income, when income is increasing, we credit the income account. So this we can identify it as a credit balance. Debtors are an asset to the business. So this 35,000 is a debit balance. Creditors are a liability. So this 24,000 is a credit balance. So here this is the trial balance for this Janakanta's business. First you have to write the name of the business, then the trial balance as at 30th June. Then under description you can write the name of the accounts, and in front of that you can write the value or the balance of that account. Here you have to separate it to the debit column and credit column. You have to identify whether this account is having a debit balance or a credit balance, and then you have to record that in the correct column. So if you have correctly recorded, then the total of the debit column and the total of the credit column will be equal. So we will there's an activity we will do this here. Prepare the trial balance using the following balances as at 30th September for Rosal's business. Here they have given the name of the accounts and balances. So first you have to identify what kind of a balance, whether it is a debit balance or a credit balance. Then you can record that in the trial balance. Activity number 1. Prepare the trial balance using the following balances as at 30th September of Rosa's business. So I have drafted the trial balance, description, ledger page, debit column and the credit column. And here first we have to write the name of the business and trial balance as at 30th September 2023. So the first one is debtors. So debtors, what is the balance of debtors account? Debtors are an asset to the business, therefore it has a debit balance. Then fixed deposit. Fixed deposit is an asset. So when it comes to deposits, in the bank we can have three kind of deposits. One is current accounts, one is fixed deposit, and the other one is savings. We all have normal savings account. Here fixed deposit in the sense we deposit a certain amount of money, considerably higher amount in a bank for a certain period, for a 6 month or a 1 year, 2 years, it may differ. So it gives a higher interest rate for fixed deposits when we compare it with the normal savings account. So this is an asset to the business, therefore we debit this. So this should have a debit balance. Then creditors. Creditors are an liability, so it should be credited. Then discount allowed. Discount allowed is an expense to the business, therefore we debit that. Purchases. Purchases is an expense for the business, so it should have a debit balance. Then machinery. Machinery is an asset. It's a non-current asset. of the business. So assets have a debit balance. Then discount received is an income. So that 9,000 should be a credit balance. Bank overdraft. So what is a bank overdraft? Bank overdraft is given for the current account holders. Current account holders means earlier I said we can have three kind of deposits in a bank. Say normal savings account, fixed deposit, and the other one is the current account. Current account is the account where you can do transactions through checks. You will be given a checkbook if you have a current account. So in the current account you have a facility to issue checks exceeding the amount you have in the account. For example, if you have a 50,000 balance in your current account and you have to write a check, or you have to issue a check of 100,000, so you can talk with the or discuss with the bank and request to issue a check exceeding that 50,000. You can issue the 100,000 check uh, by getting this facility, bank overdraft facility. So it's we have to settle this bank overdraft as earlier as possible. So they won't give this is not a bank loan, but this is a liability, since we have issued check more than what we have in the account. That's a facility given by the bank to current account holders. So since this is a liability, it should come to the credit column. Then salaries. Salaries are an expense. Therefore, we debit that. Capital as at January 1st. Capital should have it has a credit balance. It comes under equity now. Then interest income. If it is a income, it should goes to the credit column. 8,000. Then cash. Cash is having a debit balance. It's an asset account. Then sales is an income to the business. Right. So we have recorded all the balances in the trial balance. Now we have to do is get the totals of debit column and the credit column. So if we have recorded all the transactions correctly in the correct column, then here in credit side also should get 672,000. Yes. So this is the answer for the activity number 1. Activity number 2. The following balances were available as at 1st March 2023 of Thisara Enterprises, which is engaged in purchasing and selling ready-made garments. So these are the opening balances of Thisara Enterprises. As at 1st of March, the there is cash balance of 80,000, bank balance of 60,000. There are two debtors, capital balance of 150,000 and two creditors. The transactions occurred in the month of March are as follows. Here information regarding credit purchases and credit sales are given. Date, invoice number, listed value, and for other information they have given what is the amount of trade discount they have deducted, the percentage. That means when you are preparing accounts, we have to take the net purchase value, not the listed value. So if there's a trade discount, we have to deduct that and get the net purchase value. For example, for in this 38,000, we have to deduct that this 10% trade discount and get the net value. Then credit sales, they have given information regarding the credit sales, and here the sales policy of this business is to give 10% trade discount for all credit sales. So for all these credit sales, we have to deduct 10% trade discount and get the net sales value. For example, 20 into 1500, from that value we have to deduct 10% of trade discount. And here receipts and other related information, what they have received through as cash and what they have received from checks. Then payments related information, cash payments and check payments. Then we are required to prepare the cash book, bank account, purchase journal, sales journal and relevant ledger accounts. And then we have to balance these ledger accounts and finally prepare the trial balance. So we will do the question now. Activity number 2, you can find this activity in page number 155 in your textbook. So here the opening balances of Tisera Enterprise are given. So first we will record all the opening balances. So the balances are given as at 1st of March. Cash in hand balance is 80,000. So 80,000. For the description we write balance brought forward, BBF. And there's a bank balance of 60,000. 1st of March, BBF. Then debtors, there are two debtors. I have opened two debtor accounts. Here in ledger accounts, I have drafted T accounts to manage the space here, but you have to record all the transactions in or draft the ledger accounts with full format. In O-level exam, these T accounts are not accepted. So debtor Pubudu has 50,000. 1st of March, 50,000. Then debtor Pubudu Kumudu has 40,000. Then capital, in capital account, there's a balance of 150,000. That should be in credit side. Then there are two creditors, Anushka and Kanishka. They have Anushka has 45,000, BBF 45,000, and creditor Kanishka has 35,000 balance. So we have recorded all the opening balances. Then they have given details of credit purchases. Uh, so we have to record these credit purchases in the purchase journal. 5th of March, invoice number 45. The supplier is Anushka. The amount is here from 38,000. 38,000 is the listed value. Under other information, they have given trade discount deducted 10%. So we have to deduct 10% from the 38,000. 38,000 minus into 10%. That is 34,200. Then on 8th of March, 56. Supplier is Kanishka. The amount is 42,000. There's no trade discount. 12th of March, 48. The invoice number is 48. Anushka. From 34,000, we have to deduct 5% discount. Then on 18th of March, invoice number 59, that is from Kanishka. From 25,000, we have to deduct 4%. Then we have to get the total here. 132,500. So that should be debited to the, at the end of the month, that should be debited to the purchase account. So here we have to put the last date of the month. Now we will post these values to the ledger accounts. So the total value of purchases should be posted to the purchase account. Purchase account should be debited with 132,500. So the date is 31st March. For the description, we can write creditors. Then each creditor should be credited with their purchases. So Anushka has, from Anushka, this business has purchased twice. On 5th of March, purchases 34,200. Then again on 12th of March also, purchases of 34,200. 2,300. Then from Kanishka 42,000. 42,000. That is on 8th of March. Purchases. Again on 18th of March, they have purchased from Kanishka 24,000. So then we will go to the sales chart. Under credit sales, they have given information, and the sales policy is to give 10% discount for all credit sales. First one is 7th of March, invoice number 62. The customer is Pubudu. So here from Pubudu to Pubudu, they have sold 20 shirts at 1,500. So 20 shirts at 1,500 is 30,000, and from this 30,000, this is the listed value. From this 30,000, we have to deduct 10%. 30,000 minus 10% of 30,000. Then 10th of March, invoice number 63. The customer Kumudu. So from Kumudu to Kumudu, they have sold 25 trousers at 2,000 each. So that is 50,000. From this 50,000, we have to deduct 10% discount. That is 45,000. Then on 15th of March, invoice number 64. That is a sale to Pubudu. Forty children wear at 600 each. 40 children wear at 600 each. That means 24,000. From this 24,000, we have to deduct 10% discount. 21,600. Then on 20th of March, invoice number 65. There is 20 sarees. 20 sarees at 1,800 each. That is 36,000 saved to Kumudu. So from this 36,000, we have to deduct 10% discount. The total is 126,000. This total credit sale should be credited to the sales account. Credited to sales account. Date is 31st month, the last date of the month. So here 31st March. Here we can write debtors. Value is 126,000. Then each debtor should be debited with their relevant values. So on 7th of March, there's a sale of 27,000. Then on 10th of March to Kumudu, sales account should be credited and this debtor account should be debited. That is 45,000. Then again on 15th of March, $21,600. Then there's another sale to Kumudu on 20th March. $24,000. Right. Then we have details of receipts, cash receipts and cash, check receipts. 2nd of March, there's a cash receipt from sales. Second of March, from sales, they have received a sum of 20,000 cash. So we have to credit the sales account. 2nd of March. Here for the description we write cash. Amount is 20,000. And in the check column they have received on the same date they have received a check of 5,000 and in front of that other information is given, deposited the check immediately in the bank. So that means we don't need to record that check in the cash book. We directly deposit that check in the bank. So 2nd of March, again sales. They have not given a check number. Amount is 5,000 and then sales account on 2nd of March. Here we write bank 5,000. Then again there's a cash receipt from Pubudu on 3rd of March from Pubudu. The debtor Pubudu has paid 8,500. Debtor Pubudu's account should be credited. 3rd of March. Here we can write cash 8,500. Then from Kumudu on 6th of March, 12,400 worth check has been received. This check was deposited on 6th of March in the bank current account. So it has been received on 6th of March. On the same date, they have deposited the check. Therefore, we can record that in the bank account 6th of March. Kumudu 12,400, and Kumudu's account should be credited 6th of March. Here we write bank. On 7th of March, cash has been received from Kumudu 16,000, and also a check of 12,000 has been received from Kumudu. Check was deposited on 10th of March in the bank current account. So the check received on 7th worth 12,000 has been deposited in the bank on 10th of March. So first we have to record that in the cash book, and then we have to uh, record that in the bank account when on 10th of March. First we record the cash receipt 7th of March from Ubuntu 16,000 cash. Then Pubudu's account 7th of March cash 16,000. Then again cash book is debited with 12,000. Although a check has been received, it has not been deposited on the same date. Then we record that in the cash book. We consider that as a cash receipt. $12,000. Then 7th of March. Here we write cash 12,000. Then on 10th of March, they have deposited this check in the bank current account. So we have to remove it from the cash book and then record it in the bank account. 10th of March, bank 12,000. Then bank account should be debited with this 12,000. Then on 13th of March, 8,000 cash has been received from Kumudu. 8th of March, Kumudu 8,000. Kumudu's account should be credited 8th of March. Cash 8,000. Right, all the cash receipts and check receipts are recorded. Now we will record the payments of this business. There are cash payments and check payments. First one is on 9th March to Anushka they have paid or they have issued a check. So from bank account 9th of March to Anushka 13,000. Anushka's account should be debited 9th of March. Here we write bank since we are issuing a check 13,000. Then to Kanishka they have paid cash 15,400. 10th of March to Kanishka 15,400. Kanishka's account should be debited with this 15,400. Date 10th of March. Here we write cash. Then on 11th of March purchases. For that purchase they have paid 16,000 from cash and 14,000 from a check. So 11th of March purchases 16,000. Purchase account should be debited. 11th of March. It's a cash purchase. 16,000. Then there's a for the 14,000 has been issued or 14,000 check has been issued to the purchases on the same date. 11th of March purchases 14,000. Purchase account should be debited. Here we write bank since we have issued a check for this purchase. Then 20th of March they have paid salary. 20th of March salary 8,000 cash has been paid. Salary account should be debited. Cash 8,000. Then a check has been issued for salary on the same date. 20th of March salary amount is 12,000. So salary account should be debited. For the description we write bank amount is 12,000. Then the last payment is a check payment to Kanishka. 22nd of March to Kanishka 16,000. And Kanishka's account should be debited with that. Bank 16,000. Right. Now we have recorded all the transaction and all the information are recorded. So we have to get the total of cash book, bank account and other ledger accounts. total, and we have to get the balance. That balances should be extracted to the trial balance. First, we will balance the cash book. Uh, so, when balancing, we have to get first we have to get the when you are balancing the cash book, first you have to get the debit side total. Uh, Debit side total is 144,500. So we put the same value to the credit total, and then we uh, deduct. We have to get the balance carried down here. Balance carried down means uh, you have to get the total of these amounts, and we have to deduct it from 144,500. So balance carried down date is 31st March. Minus we have to get the total of this and deduct from 144,500. So balance carried down is 93,100. So it is a balance brought BBF, or the balance carried forward, balance brought forward on 1st of April. Then we will balance the bank account. In bank account, we have to see whether which side is higher. So when you see here, there's 60,000. So this debit side is higher. So get the total first. Put the same to the other side, debit side total. Then balance carried down is this 89,400 minus we have to deduct the addition of the above credit entries. 34,400. 1st of April. $34,400. Then we can balance all these ledger accounts. I have balanced all the ledger accounts. So now we will take uh, or extract these balances to the trial balance. First one is cash. In cash account or cash book, you have a debit balance of 93,100. Then bank account, you have a balance of 34,400. Then debtor Kubudu, 62,100. Then debtor Kumudu, 97,000. Creditor Anushka, 98,500 credit balance. Creditor Anushka, 98,500. Then creditor Kanishka is having a balance of 69,600. Creditor Kanishka, 69,600. Then sales, 151,000. Purchases, 162,500. Capital, 150,000. And in the salary account, there's a balance of 20,000. Then we will get the total. So if we have recorded transactions and extracted the balances to the trial balance correctly, both value, the debit column and the credit column should be equal. $469,100. The total of credit column, that is also 469,100. So that means we have correctly recorded the transactions in the accounts and balanced properly, and we have post them, or we have extracted them to the trial balance correctly. So this is the answer for the activity number 2, page number 155.